Hello again, everybody. Dwayne here from DRFX Forex and Trading. US Swiss franc. Last time we took a look at this pair, we had noted that it was in a very large consolidation formation that had been formed since early this year. The market created these waves of uptrends and downtrends that eventually led to the formation of the resistance and support boundary that we see here. Now, more recently, we had noted that the pair had given us a strong bear candle at this area here that looked as if it was giving us an indication that the market was going to be headed to the support boundary. But I'd expressed some concerns about the nature of the setup that led to the signal that basically gave us indication that we were not actually going to be headed lower, and that it was very possible that the market could actually rally at this area here, starting with this bull candle and actually head back to the resistance. Now the reason for this, you can actually see in the video that I made when that bear candle first appeared. Here you can see from the thumbnail that the market was actually projected to move higher from this area here and create a trend line, after which it would either U-turn to break the trend line and effectively create a pair of double tops and head back to support, or it would actually break the resistance area and break the consolidation to start a breakout. Now the reason for this expected projection had to do with the fact that there are certain types of signals within consolidation that have a high probability of leading to a movement to the other side of the boundary. Without these, then the movement has a very low chance of actually taking place. So the most common, as you'll see from this trading manual in the second part, in section 9, trading within consolidation, there are certain types of signals that are most common within consolidation of this size that are better to trade. U-turn signals, breaks of trend lines, double tops, and double bottom formations. And you can also add to that ABC signals as well. Here you can see an example that took place on the New Zealand US dollar pair last year. Here you can see an example of a strong U-turn that led to the movement to the other side of the boundary, again at this area here, and an example of what takes place when we're talking about a trend line break right here. Double bottoms are also very common. Here's another example of a U-turn, a strong morning star candlestick formation that takes place at the boundary and is a strong and nice U-turn. And here you see an example of double bottoms as well. So those are the most common signals that have a high probability of actually leading to a movement to the other side of the boundary. So in the absence of any of those signals, despite the fact that we had a strong bear candle, this movement was expected to actually lead to a reversal. It was still possible that the market could head to support despite the absence of those signals, but the more likely scenario was that we would actually see a rally. So it's no surprise that right now, as we take a look at the pair once again, that this first leg of that projection is actually taking place. The market has now taken out this bear candle and is now heading back to the resistance. So what we need right now is for the market to break above this high of 98,238 to be able to then create this trend line. Once it does, then the next possibility is for us to see the market U-turn and then break the trend line to start the movement back to support. Now, there's another aspect of this possibility that we should also take into consideration. Even if the market does not necessarily have to create this trend line, and so it does not actually have to break above this high to create a new high, it could actually simply U-turn at this area here, or possibly right now before hitting this high, to create a double top formation. So that is something that we can actually see that leads to the movement back to support without the added signal of a trend line break. So the double tops on their own could actually be enough to lead to the formation of the signal that starts the movement back to support. So that is what we could actually see take place within a couple of days. Strong double top formation. And as you know from double tops and double bottom formation, these usually lead to very fast breakouts. So as long as the signal that we see here is pretty strong, then the movement back to support is going to be pretty fast, and it's going to be similar to this one that took place here. Here we see a good example of another signal, the ABC, which again is another signal that tends to lead to fast breakouts towards the other end of the boundary. So we could actually have a similar breakout with this if we see a strong bear candle to complete the double top formation. In the absence of that, well, if we do see the market break a high and then U-turn, then we'd also be seeing the market create a double top as well as break a trend line. So those are the two strong signals that we could actually see to indicate that the movement is going to head back towards the support boundary. So again, the importance of identifying the most appropriate signals to trade is basically the lesson here. With consolidations, trading within consolidations as well as breakouts from consolidations, the type of signals that we trade are very important. These have to be strong and be the most likely to actually lead to a breakout or a move to the other side of the boundary. In the absence of these types of signals, we're going to be trading very risky setups that have a high probability of actually leading to a U-turn that takes out our trade. So that's why it's very important. And these signals are basically a follow-up from another section of this manual that speaks to the importance of strong setups and strong signals. So with that US Swiss franc, in that US Swiss franc example, despite the fact that the candle was strong, if the setup that led if the setup that leads to a strong signal is not strong enough, then the trade has a low probability of actually being successful. So from section 6 part 2 of the manual, which speaks to this issue, it's a situation in which both the setup and the signal need to be strong. If the signal is strong but the setup is weak, taking a risk and it's likely to lead to a loss. Vice versa, if the signal is weak but the setup is strong, you're still going to have a situation in which the market could actually take out your trade and not be successful. So again, a very common, a very typical, a very clear example of the importance of identifying these signals and staying away from signals and setups that appear to be strong enough but are actually too weak and too risky to trade. So we're going to wait to see what takes place at this resistance area. We either see a breakout or a U-turn in the form of a double top that may or may not lead to a break of a trend line and a movement to support.